Good day, my name is Christelle from Frans the Klerk Independent Technical Analysts. Timothy wanted us to look at Concophillips. They're one of the world's largest natural reserve oil exploration, production and distribution company. And what I like about this graph, Timothy, is the fact that my stochastic indicator is oversold. That means that the probability of the instrument to bounce to higher levels is more likely. And having said that, we're waiting for that blue line, the shorter K line, to break upwards through my orange line, and that will confirm a positive divergence. Now we can see that the share has made lower lows, and it's definitely trending at the moment downwards in a descending channel. But once this share starts to change $36.04 into a support, the possible turnaround would be on the cards. And more importantly, we think that this might be the handle of a possible cup and handle formation. And we've seen not only on our local stock exchange, but also in the US, there are many cup and handle formations. But the share first needs to change that $36.04 into a support if you want to consider a long. This week's bullish engulfing candle tells us that the buyers are protecting the share. They are buying in the dips. And the stop loss that you can use is at $31.75. Possible targets to the top, $38.68. Strong resistance there at $41.53. And don't forget that important red line, the 40-week moving average. And that is waiting at the moment at $44.65. Once that changes into a support, the long-term sentiment towards the share will change to positive. And what's also always nice, Timothy, is when a graph, especially a weekly graph, and this is a weekly graph, has got a window at the top, that normally acts as a nice target that one can aim for, that at some stage has to close. It can take days, months, weeks, or decades, but there's a gap waiting between $56.94 and $57.71 that at some stage has to close. I think this graph looks like a possible beautiful turnaround story, but then, as I've said, these supports there around $31.75, $31.64 needs to remain a support. Brian wanted us to look at the Nasdaq, and his question was quite specific. He said, Christelle, how far is that 40-week moving average from our current levels? And Brian, you can see that at the moment, it's so far away from it. I mean, it's waiting at 9,559, and it closed last night at 11,247. But more importantly, this Nasdaq index will confirm the next lower high once it starts to change this low of last week, waiting at 10,945 once it changes that into a resistance. And that will be seen as very, very negative. So at the moment, we went to a record high. The index retraced, it found support, and it bounced again. Assuming it continue the current resistance that is appearing on the candle, and it changes this support level into a resistance, the next lower high will be confirmed on the Nasdaq, and that will be seen as very, very negative. Only when the Nasdaq starts to consolidate above 11,566 will I assume then that the momentum to the top can continue again. Yes, we are overbought on the stochastic indicator. Yes, there is a divergence to the downside, which makes the probability of a decent pullback or a healthy pullback just more likely. I mean, to give you an indication, the percentage from the 40-week moving average to where the index is currently trading is about 14.3%. That means we talk about a correction when an instrument pulls back about 10%. So we will need more than a correction on the Nasdaq index to take us back to that 40-week moving average. Legend wanted us to look at Ethos. And I'm assuming it's the Ethos slash the Ethereum pair that you want to have a look at, Legend. But I want to change this into a line graph because I think the picture tells a different story. We can see that red line represents a 40-week moving average, but more importantly, the support that this instrument Ethos found here was a little bit higher. This support here, waiting at 0.099, is a little bit higher than the support it found here at 0.051. That tells us there's possible higher lows in the making, and that is seen as positive. Yes, my indicator is sitting on 40. It's not an ideal place to enter into a position. But once this instrument changes 0.15 into a support, that will be seen as positive because that will change that previous resistance into a support. And a very strong resistance is waiting there at 0.2295 that needs to change into a support to assume the next higher low and to assume that this pair can take the instrument to maybe back to that high back in October 2018, waiting at 0.5675. I would only be concerned about Ethos when it starts to trade again below that 0.099 level, and that is waiting at that support. The long-term sentiment towards this pair has changed to positive since that red line, that 40-week moving average, has changed into a support. Mohammed wanted us to look at Kumbha, a share that we feel just often ignores all technical indicators and just continue to rally to higher levels. But what we can see here, Mohammed, is that Kumbha gave a healthy pullback, like it did back here in June 2020, maybe just a sideways consolidation here in April. But every time the share pulls back, it confirms a bullish flag formation and it just continues to rally. So at the moment, and I'm going to draw that possible bullish flag that needs to be confirmed on the weekly graph, and I'm counting 3 touching points. That is a strong line. So at the moment, Kumbha needs to start to consolidate above 524.75. Above that level, this possible descending channel might confirm a bullish flag formation, and a bullish flag acts as a continuation pattern. That means this overall uptrend that we've seen can possibly continue to higher levels should this channel remain a support. And that is waiting there, as I said, above 542.57. A possible stop loss that you can use, and I'll give Kumbha a lot of breathing space, can be used as 468.53 Rand. And that is a strong level that you can use as a possible stop loss level, assuming that the instrument, that Kumbha, can continue to rally. Take note though, however, that there is a negative divergence for more downside. There's a lot of room still on my stochastic to take it back to oversold levels, so it will be a risky play. Assuming you don't want to buy Kumbha and you maybe want to consider, to short it, I would use this low and as the next entry level for a possible lower high on Kumbha, and that is waiting there at 511.50 Rand. At 511.50 Rand, that level changes into a resistance. The next lower high on Kumbha will be confirmed that maybe can take it back to the support there, as well as the 40-week moving average. I'm going to give you that exact levels now, and that is waiting at 437.83 Rand. And the 40-week is waiting at 422.82 Rand. Only when Kumbha starts to consolidate above 580.90 Rand can we assume that the momentum to the top will be in place again, and that lower high will be wiped off the table. It's a dangerous play. It's either along above that descending channel or a short when the lower high is confirmed. Just keep in mind, a stronger Rand might put Kumbha a little bit under pressure as well. Jeff wanted us to look at Lloyds Bank. Lloyds Bank, one of the international counters that a lot of investors favor, especially some of our clients, and they are listed as an American depository receipt on the New York Stock Exchange. And very interesting, this graph almost looks like a replica of our first Rand graph, a possible head and shoulder formation that was wiped off when that diagonal trend line changed into a support. But what I like about this graph at the moment is that it's oversold, because that is the best place to enter into a possible trade. The next step is to wait that those two lines that you will get confirmation of the divergence, that blue line breaks upwards through that orange line for confirmation of a possible turnaround. So at the moment, the first sign of strength would be above $1.35, and that's 1 cent away from it. If you want to wait for the confirmation of that diagonal line to change into a support that is waiting at $1.39. But what excites me the most here is the fact that we've got windows. We've got windows at the top of possible targets where the share can aim for. And that biggest window is waiting between $2.74 and $2.82. A nice gap on a weekly graph. And that means it weighs even heavier of a possible target for the share. I would only be concerned about Lloyds when it starts to consolidate below this horizontal line. And that is waiting at $1.28 on a Friday close. Below $1.28, I will be concerned again about Lloyds Bank, and then this descending triangle might take this share even lower. Please feel free to send through your questions for next week's show. Have a fantastic week. Take care.